Wolf. It's good to see you all here. Very excited to be joined by Oktay from Leverage Shares, a firm known for giving investors some pretty cool high conviction exposure to some of the fastest growing markets. And we're going to talk about basically every single market is popping right now. Well, depending on what you mean by popping, but there's a lot of excitement just around these markets. A lot of investors are starting to learn and get excited and trying to take advantage of the fact that there's all this information out there. There's all sorts of ETFs that are coming out every single day. So it's good to kind of stay on top of the market. Oktay is the guy behind it all that we're going to be talking to today from Leverage Shares. It's good to have you here, sir.
Thank you very much, Kate. Great to be back on. Always a pleasure.
Absolutely. So for people who haven't heard of you guys for the first time, give like the quick, skinny, like elevator pitch breakdown on what is it like the core thesis of Leverage Shares, and then we'll dive into some of the products you have coming out, and we'll go from there.
Sure. So I think I should start by just putting a backdrop behind the entire sort of leveraged ETF space globally. So leveraged ETFs, they've been around for the better part for about 2 decades by now, but they've predominantly been around indices, fixed income, some commodities, etc. And nobody had really done this around individual stocks. So Leverage Shares was actually born in Europe back in 2017 by launching the first ever single stock leveraged ETPs. So we initially started out with some 2x products around some more boring companies like Nike, McDonald's, etc. And then we expanded that range to even leverage factors of up to 5x around some different asset classes. But nowadays in Europe, we have over 200 leveraged ETPs and some income products as well. And then we expanded the leverage share suite to the US as well, where we have, I think, close to about 100 2x single stock ETFs as well. So, it was born in Europe, the entire concept, but I think by now it's very much a globally understood sort of phenomenon. And, I've been seeing some news lately about how these products are actually going live relatively soon in Asia as well. So when we started this entire thing almost 10 years ago now in London, it's really interesting to see how the entire concept sort of blew up and is becoming one of the most popular categories within the ETF space nowadays.
Yeah, I was going to say, like, there was some all this stuff on the crypto side of things, like the stablecoin bill, the Clarity Act. Everyone's getting excited about it, and there are obviously multiple stocks that are sort of tied and correlated to that specific thing. And then Clarity comes out. It's not exactly the direction people were hoping. Some of those stocks take a hit, and then the single leveraged, some of the inverse single stock of some of those were starting to rip. And I was like, wow, this is so crazy. Like, if you're actually on top of these markets, there's ridiculous opportunity just at every corner. And so, some of those single stock leveraged ones are very cool. Tell me about some of the other ones you guys have that you're excited about, maybe certain sectors in the industry that you guys are kind of focused on right now.
Yeah, exactly. I think most people are used to trading, the long leveraged ETFs, and they're not necessarily comfortable in using the inverse products. And we see this in our own suite, right? So especially if I look at our trading volumes in Europe, there's like an 80-20 split between the amount of trading on the long products versus the short ones. So that just shows you that people understand them better. It makes more sense. I mean, whatever the underlying does, you're just multiplying it by a leverage factor. So it's relatively straightforward. And most, especially, individual investors aren't necessarily comfortable shorting the market themselves. So they've never really looked into it. They're not necessarily, they haven't paid much attention in terms of what they can achieve with an inverse product. But like you mentioned, especially in markets like this one, where you have this, constant downturn, and, we might have a few spikes here and there, but the longer trend seems to be on the way down. This is where inverse products really start to make sense, because you're not just sort of betting against the company, but in many cases you can use these products to hedge existing exposures instead of selling some of the core holdings that you have some conviction on for the long term. So I think unless the market sort of gets to a place where you actually have a need for these products, people tend to ignore them. But anytime there's some real volatility in the market, we do see some uptick in the inverse products, and that's exactly what we've been seeing. So in the US, especially the leverage share suite, there are no inverse ETFs, but in Europe we have a bunch of them. So like I mentioned, on both the long and inverse side, we have leverage factors of up to 5x daily, which is, I think it's a lot more than many investors will ever be able to stomach. But we have them across, various asset classes. So we're best known for the single name products, but we have them around commodities. So we have like a 5x gold product. We have them around, products like gold. So you can do 3 times long, 3 times short. And then, of course, we have even, if you want to do fixed income, we have some basket products like around Mag 7 and names like that. But essentially, we're always paying attention to, where the market narrative is going, what the buzz is about. And we try to get ahead of the puck in terms of what people are probably going to look for, especially as certain themes sort of play out. Obviously, we've seen this with tech, with AI, with autonomous driving, whatever the next big thing might be. But I keep saying we're in the business of basically empowering investors with the tools that they might want to use, and we're not necessarily in the business of telling people where we think the market's going to go.
No, it makes total sense. And that's actually a really interesting stat. I wonder if that's like I bet it's similar across the board in terms of people just not being comfortable shorting the market. It takes like one layer deeper. It's like you really know you're a DJ in these markets if you're like, okay, let me bet against the market here. That's really interesting. I had not really thought about that. Wow, very cool.
What I will say is that because in order to short stocks, a lot of times you have to have certain, you're usually restricted as an individual investor from being able to directly short sell stocks. So, in order to go around that, you have to, pass some tests. You have to prove that, you have some investing experience. And it's always been very scary. So people thought you can only sort of take one directional sort of like gauge the market in almost in a single dimension. Whereas these products are basically telling you wherever you think the market's going, there's a way to play it in both directions, as long as you have a strong enough conviction and you understand the products, right? Because the one biggest misconception that remains to this day is that, if Tesla is up, let's say 10% over a 10-day period, why isn't my 2x ETF doing exactly 20%? So this, compounding effect that, when people hold on for longer periods, it does continue to confuse some investors. But what I will say is that today, investors are more educated than they've ever been in the past. And I think I've mentioned this even last time, but some of the most sophisticated questions that we've gotten around our products, or maybe some suggestions for new products, have come from individual investors and not necessarily the bigger institutions.
Wow. I love that. So tell me a little bit more. So like with leverage shares, how do you guys balance innovation with risk management when you're structuring leverage ETF products? When you're talking about like high growth sectors like AI or crypto, things that are fast moving, how do you guys balance this?
Of course. So whenever you're launching a product, especially if it's one that's very focused or in a certain niche, there's, it's a mix between an art and a science, right? So because it's very hard to predict what the next big stock will be. It's very hard to predict what's the next, SanDisk is going to be, or which one is going to, be the best performer for the year. But like I said, we're trying to sort of be a supermarket where we have lots of different tools that people might use in different market environments. Because nowadays, value stocks are more in vogue than growth names. Covered call products, they're not necessarily something that's popular when everything is moving upwards, but when the markets are choppy, all of a sudden people want income, because not only are you getting equity market exposure, but you're collecting, let's say, either weekly or monthly distributions. So this entire concept, moving from not just leverage, but also to like this whole concept of income options or covered call products, this wasn't a very big category up until about a year and a half ago. And we were also among the first to enter the space in Europe as well. Because in the US, I think you have quite a few providers by now where you can get, let's say, a covered call or option strategy on individual stocks. But in Europe, you didn't have that. And that's one of the reasons why we launched Income Shares, which is one of the sub-brands of leverage shares. And like I said, most people know us only for the leverage products, but we actually have, a wide array of strategies outside of just leverage and inverse. So, just kind of seeing that the trend in Europe usually follows what happens in the US, and getting those products out before the trend was even there really allowed us to position our products as one of the first in the market to be able to offer those to individual investors across Europe, right? Because unlike the US, the market here is very fragmented. You can't just launch a product in Europe. You have to launch it, let's say, you have to launch it in Italy, you have to launch it in London, you have to launch it in Germany, and then you have different jurisdictions, and then you have different tax treatments, different languages. So it's very different, and I would say it's probably 30 to 50 times more challenging to succeed here. But the good thing is, well, at least for us, we've been doing this for quite a while. So over time, you kind of learn what works and what doesn't. But it's always interesting to see that what usually happens in the US tends to trickle down into Europe, and we're basically seeing some of the same trends in terms of popularity of certain categories of ETFs, seeing that same uptick in Europe nowadays.
Got it. Got it. Very cool. And then tell me, so like with like how often do you guys go through like rebalancing or updating when you're talking about your underlying index or your holdings?
Yeah.
Is that pretty often? Is that weekly, quarterly? Like, how do you guys think about that?
So usually with leverage products, it's done on a daily basis. You can structure them in a way where this is done weekly or monthly, but that introduces its own share of complexity. So with daily leverage, it's relatively straightforward and relatively simple for almost anyone to understand and trade the products, because regardless of whether I got in on, March 31st or March 15th or, whatever day of the month, I'm going to get the same experience as somebody that has entered the product on any other day. So if I hold for a full day, I'm going to get, let's say 2x the return of whatever the underlying stock is. If these were to be rebalanced on a monthly basis, then that experience would be completely different, because whenever you rebalance, that's where you set that leverage ratio. So if you rebalance, let's say on the last day of the month, and I, as a new investor, got in, let's say on the first week after a week when the new month began, then my effective leverage would be very different than somebody who bought exactly after the rebalance date. So that's where it gets a little bit more confusing. And I've seen some ETF issuers try to go the route of doing products that are monthly rebalanced. There's even quarterly rebalanced. Yeah. But like I said, those only work as investors expect if they're able to buy into the product exactly when they need to, which unfortunately isn't often the case, because some people want to be active investors, but sometimes they miss some key dates. Most of us have day jobs that don't necessarily involve looking at, trading view technical charts all day. So it's one of those things where daily sort of makes the most sense within the ETF wrapper, and that's how we treat all of our products. So within the Leverage Shares brand, in Europe, all of the products are daily rebalanced, whereas our sister company in the US, they have some products which are called monthly capped accelerated products, and they work slightly differently, but that is a very different experience compared to daily rebalanced funds.
Got it. What would you say is like the type of investor profile these ETFs are like? Yeah, I guess that's my question. Like, well, what is the type of investor profile, and which specifically, like with the single stock leverage ones versus these bigger wrappers and stuff? Like, are you looking for more long-term investors, or is it more for traders? Like, how do you guys think about this?
It's definitely for traders. Longer term investors, they tend to dabble in these products around, earnings or some other key market events from time to time. But these are, 100% geared towards active traders. Because what happens, like I said, in many cases is people, they buy in and they hold for a few days, and they don't necessarily get the experience that they're expecting, just because of that rebalancing element that we talked about, right? The market remains choppy for about, let's say, a month, and they never sold the product. The underlying is flat after the month, and then they end up losing money on the 2x product, and they're just wondering what happened. Yeah. So this is why it's very much geared towards active investors, and we've actually seen that across our range, right? When you look at a normal ETF, there is this ratio called the churn ratio, which is how much the product actually trades relative to its AUM. So for a normal ETF, it takes anywhere about, I would say, 6 months to a year for it to trade the entire size of its AUM. With leverage products, it's almost the opposite. So if you have a product that's, let's say 100 million in AUM, that product might trade $100 million worth in a single day or over a few days. Okay. So that just shows you that these products are used by traders and not the buy and hold investors. And that's, I think, one of the key ratios that we look at as, an issuer of these products, to see that end investors are actually using them as intended, instead of, buying and holding for very long periods. And I was actually looking at ticker TSLG in the US, because this is one of the 2x ETFs out there. But one of the more interesting things about it is that I think it might be on the lower end of the 2x Tesla ETFs in the US, but it trades, I think it's at number 2 in terms of trading volumes. Like, it trades 5 times its AUM every single day, if not more, which is a very interesting phenomenon that I personally haven't seen before.
Interesting. Yeah. I'm also curious. So the commodities have just ripped this
Yeah.
past year. I've never seen anything like it. There's many people I know who are, I guess they've been waiting for it, but no one really knew when or how it would happen. We got it. We saw oil having insane price action. We have gold seeing insane price action. Like all the commodities are behaving like meme coins. So
Yeah.
anything like this, I don't know what to think about it. But tell me about some of the products you guys have surrounding this. How are you thinking about the commodities sector, I guess? Is there any learnings you're finding about it as well? It's kind of like a three-pronged question in there. But I'd love to hear your thoughts.
I saw a very interesting post. I didn't really dig into the data, but there was a guy that made a post on X, and it was showing a portfolio of holding just a basket of tech stocks and a basket of energy or commodities related stocks. And that portfolio did really well since 2000 because whenever tech took a beating, sort of energy made up for it,
Oh,
and
wait,
vice
I
versa.
think I saw this post too. Yes.
Yeah, exactly. And we're seeing that exact same thing play out this year, right? And obviously the reasons are very different to yesteryear, but it just shows you another reason why people need to diversify before it's too late, right? I think one of the best performing individual stocks this year is Exxon, for example.
Yeah.
And who would have thought Exxon would be a popular trade in 2026, right? Like it definitely wasn't on my list. And I was looking at our European range of products, and like we have a triple levered Exxon product, and I think it's
Oh
up
boy.
over 150% year to date. And it was one of the worst performers since we launched it up until this year. So it's one of those things, once again, you never know what's going to take off because you can't predict the future. Even if you know what's going to happen, you don't know what Trump's going to tweet, you don't know how the market's going to position in anticipation or afterwards. So you just have to have a variety of products out there. That's why, once again, I'm very adamant on having a very broad range of products. So in the US, once again, we have our sister company, I should say, they have a range of products within the thematic range called themes ETFs, and those are focused on a lot of themes, anywhere from, let's say, defense to global systemically important banks to, of course, companies in the energy sector. And of course, there's a lot of individual stock names within the leverage share suite in the US. In Europe, we're predominantly known for the leverage products. And within our leverage suite in Europe, we have, I would think at this point, almost everything under the sun. We have all the major individual stocks, a lot of sectors covered, a lot of the most important commodities trade every single day. And we actually listed another 40 products literally 2 weeks ago. And I'm gonna have to pull up the list because I don't even remember everything that we listed, but we did 3x long and short uranium.
Wow.
We added a 5x long gold ETP. I mean, there's a lot of products that were added. We did a triple levered SanDisk. We did a lot more semiconductor names, but yeah, it's one of those things where we constantly try to listen to what the market is looking for out there. And like I said, at least in Europe, we can do a few things that we're not allowed to do, or our sister company is not allowed to do in the US in terms of leverage factor. But that does give us sort of an edge here in terms of being able to not just do higher leverage factors, but come to market quite quicker because just because we've been doing this for a longer time.
Absolutely. That's very cool. Yeah, I was having a peek and I was just like, man, these are wild. 3x long, 3x shorts on oil, on gas. Like, this is such a crazy time to be alive. I don't think anyone expected to be able to even have access to this kind of thing. How has the market reacted? How have your investors reacted? I imagine, I know you mentioned that you guys listen to them when you're looking at listing stuff. But has the volume been crazy? Like, has the reception been good, I guess, after diving into commodities and stuff?
So of course, the reception has been, I would say, relatively. It usually is relatively muted right after we launch because we do have a few more challenges here compared to the US. Like I think US investors have been relatively spoiled in that once a product, let's say has its IPO or a new ETF is launched, they can literally buy on their favorite broker on day one, and that's not the case in Europe.
Oh, I see.
On day one, it's very hard to buy. You sometimes have to go to different brokerage platforms and send them lists and all of this regulatory documentation and actually convince them to add the products. And this whole process usually takes anywhere from a few days to a few weeks. So we're going to see sort of the fruits of this whole listing play out, I think, over the next month or so. But even for now, we've seen some decent volumes, especially on triple levered Circle. We have a 3x long Ion Q product. We did, like I said, the commodities product. We added long and short copper 3x, uranium, oil, natural gas.
Yes.
So there's a lot of products that are going to be available across the continent in a short period of time.
Yeah, exciting time to be alive. I will say, exciting time to be alive. Um,
Absolutely, absolutely.
so, what sort of like in-house or data sources do you guys rely on when you're looking at just analyzing the markets before you launch an ETF or an ETP? Is it all in-house? Are you guys using AI? Like, how do you guys do this?
Yeah, of course. I think many of the members of the team individually are using AI to their own, for their own needs in their own way. Like as a company, we've been implementing and we've been embracing AI, I would say for the better part of at least a year and a half, if not over 2 years. And, I personally use it every single day in my life, like for all the daily tasks that I do.
Yeah.
But when we're trying to find out in terms of when we're looking at what kind of products are people looking into and what kind of products they'd like to see, obviously we're paying attention to trends in other markets, right? Like something that's working in Asia or something that's working in the US. And usually that sort of trend tends to come to Europe as well. So like I said, it's somewhere between an art and a science where just because let's say an individual stock is popular now doesn't mean it's going to be popular once we make a product around it, because it doesn't happen overnight and it could take a few months. So by the time the product comes out, sometimes the buzz is already over, and then it never really, it never has its day in the sun, so to speak. But like I said, sometimes you have a few duds, but that just comes at the expense of being able to make a few really cool products. And if you look at sort of the top 10 products traded on London Stock Exchange, like probably 9 of the 10 are from iShares or Vanguard, and we have one product which is triple levered Tesla. So it's like by itself, it's taking on some of the big dogs in the industry. So it's something that we're quite proud of.
Very cool. Very cool. Looking ahead, like next 10, 12, 14 months or so, where do you guys envision, like, I guess the direction of the company? Is it more so just doubling, tripling down what you guys have right now? Are there other sectors you're looking to dive into? Is there any new types of products you guys are launching? Like, how are you guys thinking about this?
Absolutely. So one of the areas that we're paying a lot of attention to is the options or derivative income space. So like I mentioned, this is the sub brand that we launched, which is called Income Shares. And we expanded that suite recently as well. And we now have, I think, close to 40 products. And I'm super bullish on this sector because I do think, based off of whatever, ends up happening in the Middle East, I don't think these kind of conflicts will end anytime soon. And when they do start, I do think they're going to last for longer than they've done so in the past. And in those market scenarios, people are especially wary of what's happening within their portfolio. So whether they're capping their downside, whether they have some kind of buffer, or whether they're just looking for some income every single month without necessarily looking to outperform the market. I'm super bullish on this entire segment, especially in Europe. Like I said, there's not a bunch of companies doing this yet. And I think we have a pretty big advantage given that we've been doing this for at least the better part of a few years. And I think we're going to launch a lot more products that aren't just going to be the traditional, let's say, cash covered puts or covered call kind of products, like the more straightforward option strategies. But we're going to be introducing, I think, a few more sort of option overlay strategies that you would have only seen within products that you could get from a bank, like structured notes or even more sophisticated products. So I'm super bullish on that sector, and that's actually going to be one of my few focus points for the rest of the year.
All right, very nice. Well, look, I'm looking forward to that, and that'll be very cool. I'm sure the investing crowd will be hyped about it once it comes out, and I'm excited to hear from it and see more there. Oktay, look, I love speaking with you every single time. These are fun conversations. I feel like I learn something new every single time. Thank you so much for coming on. And for everyone who's watching back at home, by the way, if you're in the Wolf family, definitely be sure to repost the stream as you're watching this. And if you guys want to find out more, by the way, give them a follow. They'll be tagged right above our faces. And if you're, especially if you're watching on X and you want to find out more about Leverage Shares, we'll have a link in the tweet below this video. And you can click that, and that'll take you right to their site. You can get their whole suites of various products that they're offering. Oktay, any final thoughts before we sign off here?
Not really, Cade. Thanks a lot for the invite. It's always a pleasure. I'm paying attention to the market, just like I'm sure everyone else is that's viewing this current spaces. But yeah, I mean, I just want to say that as a company and me individually, we're super open-minded and we're very much active on social. So if you have any product suggestions, any feedback, reach out to me directly or to us as a company, info@leverageshares.com. We always want to hear investor feedback.
Absolutely. All right, everybody. Take care. Have an amazing day. We'll see you in the next one.